Breakdown, plenty of, well, pretty much a lot of green on the screen at the moment. The big question, which I suppose Michael just sort of alluded to there, can we sustain it?
It'd be great to think that the Australian market saw a lot of buying because it is looking attractive at the moment. And I guess the big question for investors and traders is, do they follow a value strategy or a growth strategy? If you look at a value strategy, then yes, the market is looking attractive. At FY12 earnings, it's trading at 11.5 times compared to an average of 14.5 times. But then if you have a look at growth outside of resources, it does look like a possible contraction is happening in the rest of the economy. So I guess two sides fighting against each other, and the Australian market wasn't the only market going up today. In the region, we saw some phenomenal performances, and Korea was a standout. We saw consumer confidence at a 3-month high. The Korean Kospi up by 2.8%. The Australian market, we saw some good economic numbers as well in terms of those capital expenditure, which beat expectations. But really, in terms of markets, what seems to have happened is the euro took off and everything else followed. And this is a trend that we've come to see in the last few sessions. If we have a look at the euro against the Australian market, this is what it looks like. The Australian market on top, the euro down the bottom. And if I just overlay those intraday graphs, you can see they basically moved together throughout the day. So it does look like the euro strengthening, having a good impact on the Australian market. The other thing to put into the equation that it was options expiry for single stock futures and options. So altogether, that derivatives expiry probably also had an impact in terms of volumes and movements.
Issue you were talking about, obviously the overarching concern is what we're seeing out of Europe with those sovereign debt concerns. If we were to see another bump in the road, we were to see this ongoing disagreement between the EU and the ECB as how to best proceed with Greece, if we start to see more political aversion to a bailout from some of those northern states, and if we saw some sort of a contagion effect continue and the euro plummeted, does that mean it would likely drag down our market and other global equity markets as well? Is it that tied together?
I think for the time being, a lot of the bad news from Europe has been priced in, so it would take a major shock to move the markets on the downside. But all up, we do seem to still be in this correction phase. So for technical analysts, still waiting for that downtrend to really break. And if we have a look at the 52-week chart for the Australian market, this is what it looks like. You can see that we've been channeling down quite nicely. So this jump up today will probably target the top end of that range before bouncing back down. But if we do see the top end of that range being broken, that would be a positive sign, and that would signal that that downtrend has finished. But for the time being, we've seen a correction of 7.8% so far over a period of 7 weeks. So it is quite a long contraction. But as you mentioned, still some concerns in the market around the European debt situation and also around the US. And tonight in the US will be important because we get the first quarter GDP numbers, and the market's expecting to see growth of 2.2% there.
Well, let's see. We talk about it a lot, but it had a particularly good day today, closing up just over 2%. Obviously, that bounce back in commodity prices was good, but also Goldman's again in the news, seems to be dominating our markets at the moment. They like BHP.
BHP Billiton did have a good day, and if you have a look at the technicals, bouncing off a key support level as well. So BHP Billiton has been a stock that we have been watching this week, and it does look like it's a positive sign. I guess one of the things we have seen with our resources is that because we have seen a strengthening off in the euro, we've seen a weakening off in the US dollar, and because most commodities are traded in US dollars, that's been fantastic news for commodity prices. So it was the energy, the material sector which led our market, and as the US dollar strength weakens off, we will see that rise in commodities benefiting our big resource companies. BHP Billiton, Rio Tinto, probably crucial to any diversified portfolio. And if we have a look at today, we also saw that capital investment number out for the first quarter. Now this is important because it gives us a signal about how companies feel about future demand, and of course that was really driven by mining capex, and it is expected that this year will be a record in terms of mining capital expenditure. So really those miners signalling that they are very confident about future demand.